Hey guys, today we have Hubert and Wade from Open. Thanks everybody for jumping on the AMA. I'd like to pass the mic to Hubert to give a brief intro. Hubert. Okay, maybe he's having a few issues with his mic. Wade, can you jump in, please?
Yeah, absolutely. Hi, everyone. Thanks for hopping on. I'm super excited to talk about some of StakeDAO's option strategies. I'm Wade. I lead marketing and community at Open, which is a DeFi options protocol that's protocol first. So we enable amazing teams such as StakeDAO to incorporate option strategies into some of the strategies on their protocol.
Okay, guys. Thanks for the patience. We're going to go ahead and get started. I don't think I think Hubert has been having some issues. We are going to get into it. So just remind everyone that if you have any questions, please go ahead and post them in the Discord channel. The options channel you will find. We have posted the link. So, Wade, would you like to give a little bit of an intro about Open, about the protocol, about how you guys got into the space, and then we'll kind of kick things off from there.
Yeah, absolutely. So Open is a DeFi options protocol. It was actually the first DeFi options protocol in existence, launched at the beginning of 2020. And what started as sort of a vehicle to hedge market risk quickly morphed into a full options chain where you can buy and sell calls and puts. And the protocol's always placed a big emphasis on being protocol first. So the way I'm not an engineer, but the way the eng team built the protocol was to be as flexible as possible, allowing anyone to build on top of Open. And around the beginning of this year, a really cool protocol called Ribbon launched the first structured products in DeFi. And what they did was kind of package option strategies into structured products that make options easier for users in DeFi to trade. And that sort of unlocked a lot of the problems associated with on-chain options regarding liquidity and gas. And so we've seen more and more of these structured products pop up in DeFi. When we started talking to StakeDAO about a potential integration or partnership earlier this year, these ideas of perpetual vaults came up. And essentially, I guess, like, for everyone listening, I'm sure there's this perception out there that options are these really complex, risky strategies, which can be true. But I think what StakeDAO is building right now is a really good way to become familiar with some of the simple type of option strategies that allow users to generate real sustainable yield. And I'll like quickly give sort of like a high level overview about like what perpetual vaults are, and then can kind of pause and give Johnny a chance to like ask any questions that dropped into the Discord. But at a really high level, just think of perpetual vaults as a vehicle to structure a strategy that is automated in perpetuity. Now, there are a lot of buzzwords there, but it's essentially packaging these financial strategies in a way that only require users to deposit funds, and then these vaults automatically carry out the strategy at hand. So they've in the case of these option strategies, they've abstracted all of the complexities away associated with options trading, where users would previously need to pick the strike price and pick the expiration date. And this vault does that for you. Another benefit of perpetual vaults is that it builds a community around a specific strategy in DeFi. So instead of isolating yourself and doing this on your own, there's a group of people that are also deposited in the vault that you can discuss the strategy with, you can rally with. This like when the vault is earning high yield, and then if there's any losses in the vault, you can sort of cope together, and you don't feel isolated or that you made a dumb decision. It just was an off week. Another benefit to these perpetual vaults is that it dramatically simplifies the user experience. I know StakeDAO has a really nice clean front end, and so instead of looking at a full options chain, all you have to do is click on the strategy and deposit funds. And then this is a really important point when thinking about like structured products and these option strategies in DeFi, is you have high yields in like all these yield farms. But I'm sure if most of you have been farming, you realize that those yields tend to evaporate quickly, and you typically have like very fast jump in and jump out type of behavior. The reason for that is these rewards dry up and it's not sustainable. But one thing about these option strategies are they're real financial strategies aimed at generating income and yield. And so it doesn't matter if you're not a whale. These types of yield aren't going to dry up because they're actual financial strategies aimed at generating income, and you can effectively be deposited in these vaults and maintain a sustainable level of yield for the foreseeable future, because there's always going to be demand for buying options. There's most likely always going to be the ability to sell these options. So that's one important thing to note, that like as DeFi starts to mature and these sort of unicorn buck strategies tend to evaporate, you're going to need to find these type of opportunities where you're actually doing financial strategies that generate yield.
Right, and so I think there's a bit of confusion for around DeFi users in general around options and kind of obviously people are familiar with speculating using options and buying calls and buying puts. However, okay, one question we have is around how margin calls are enforced on options. So could you speak a little bit about that, Wade?
Yeah, absolutely. So I think like margin calls typically happen when you have the ability to under collateralize options. Right now in DeFi, Opyn is the only protocol that allows you to sell partially collateralized options. And other than that, everything in DeFi is fully collateralized. So there'll never really be a margin call if you're selling options, because you have to put up 100% of the collateral to actually be able to sell that position. And that's the case with these perpetual vaults or these option strategies on StakeDAO, is that like everything's fully collateralized. So like none of these positions are going to be liquidated because you've already put up the collateral.
Hey everyone, I'm really sorry about the delay. I guess those centralized networks are not so efficient. So I had to create 2 new Twitter accounts to finally make it.
Glad to have you here, man. Guys, we've just had a question around option strategies on altcoins. So obviously right now we have ETH, we have BTC. These are our initial strategies. Is this something that could be architecturally possible?
Yeah, I mean, currently we use basically what we do is that we sell our options to market makers. So as long as there's liquidity on those on those assets on CeFi option markets. Everything is possible, but right now we are mainly on Deribit, which is the largest option exchange for DeFi, and it only has Bitcoin and Ethereum. So and also, like, maybe there are other platforms where you can trade this kind of stuff, but I'm sure you have maybe already talked about that, but we are in the process of thinking of how we can automate the process of strike selection but most importantly option selling. And with that regard, it's key to not make everything more too complicated, like going on different platforms, etc. So that's why it's a very interesting question. Could be super fun to have like options on degen altcoins, but I guess it will eventually happen, but maybe not like in the next couple of weeks at least.
I mean, I guess the obvious challenge there is the more volatile the asset, the harder to determine the strike price, right?
Yeah, exactly. And currently our strategies, so that's also something. I mean, currently our strategies is basically the objective is to generate the highest yield for an asset for our users, right? It's not really to take a bet in whatever direction. So we don't encourage our users to AP in, AP out, etc. But definitely, when we initially reached out to Opyn to find ways to work together, the idea was to list options so that people could just buy or sell options, and not only generate yield on smart strategies such as what we have done. And this is probably maybe not the next thing we are going to build with Opyn, because we have a few things already in the pipeline, but it's definitely something that we will put on the UI. We will enable option trading, and I'm pretty sure that just option trading will be open to way more tokens than just ETH and BTC. And also potentially, I mean, I'm sure there will be the question, but also on other layers, etc.
Yeah, and a few other things to note about altcoins is that in order for the strategies to be possible, like the first thing is that there needs to be a reliable oracle for the settlement price. So that's number one. The second thing is the person who, whether it's market makers or users, the ones that are buying the options typically need some market to hedge themselves. As the vaults get bigger and bigger, you take on more risk the more options you buy. So if there's not a liquid sort of market to hedge yourself, it makes buying those options from StakeDAO pretty risky. And given ETH and BTC tend to have the most liquid markets in DeFi and CeFi for crypto, like that's one of the main reasons that it's probably best to start there. And then as you have these sort of more liquid blue chip DeFi tokens, you can kind of venture out into some of those.
And we've just had a new question around leverage on option strategies. Maybe if we could kind of get into the possibility of this from a tech perspective, but also like, is it a viable option, and is it going to be profitable?
So yes, that's actually an extremely good question. It's a question we've already asked ourselves, because obviously when you see these APYs, I mean, why just be happy with 600% when you can have double that, right? So it's a bit different than just leveraging by borrowing stable against all the stable. Like, for example, borrowing ETH against ETH covered call strategy, or even like, for example, we could imagine borrowing if the put selling strat was listed on Abracadabra, potentially we could borrow some meme against the Frax put selling strategy. But the truth is that the LP tokens of our option strategies are not up only, right? There's still some risk. So it doesn't mean that it's not possible, as, for example, you have plenty of stables that allow minting against ETH or Bitcoin or whatever. It just will not have the same, say, collateral ratio than just a stable to stable borrowing. But this would be really super amazing to leverage. And then another way we could leverage is to, buy options and sell options at the same time, and then you then you use so you actually cover your position, and then this allows you to take a position on a certain range instead of just like you're being profitable until, say, for example, if we take the example of a covered call strategy, currently we are profitable until the strike price plus the premium. But if we were to also buy an option at a lower strike price, for example, we would be able to cover our position and increase de facto our collateral ratio and then sell several options, right? Kind of stuff. Opyn is currently working on this kind of potential strategies, which would enable us to basically sell more options than one option per token of collateral. So this, obviously, it's a bit more risky, right? But it should be quite cool. Don't know if you, Wade, if you have anything to add on that.
Yeah, I think for like increasing the leverage, and this is definitely something we thought about, because like once Opyn launched partially collateralized options, which allow you to use less collateral to sell more options, or less than the strike price for puts and less than 1 ETH for calls. Like, it's important to remember that it's sort of like a double-edged sword. So you might have these really high APY figures from selling sort of like a partially collateralized vault, but at the same time you do run the risk, like the more leverage you use, the like more risk you run of potentially being liquidated. And it's all like, at this point, it's all about finding smart ways to generate those high yields, because I don't think it would be a great user experience for anyone's position to be fully liquidated. So with the research team has been looking at different mechanisms for sort of these spread vaults, which like remove a little bit of the possibility of like you won't be liquidated. But again, like the higher leverage you do use, the higher risk you have of losing more of your underlying collateral. So we'll eventually get there. And then I think once users can kind of like familiarize themselves with the vaults and what it means to sell puts and sell calls and the risks associated with it, they're free to make their own decisions. But I think like it is something we're thinking about. We're just trying to figure out the safest way and the best user experience for everybody.
So like you kind of touched on a lot of these points there, but we've just had an interesting question around what are some of the pain points seen in the option space right now, from not only from a user perspective, but also from a developer perspective? Like what are the limitations?
Okay, I start on this because for on the user perspective, it's quite it's quite easy. So the main difficulty for us, I'd say, is that the whole process of running those strategies, etc., is quite expensive in terms of of gas. But yeah, that's really the main stuff. Otherwise, there are not so many pain points. I think what Opyn has built should be able to scale dramatically. But Wade, I think you have much more insight on what's been challenging on your side.
Yeah, I think there's a distinction I want to make between like options and DeFi and then perpetual vaults. I think some of the biggest pain points with options that aren't in these perpetual vaults has to do with liquidity, has to do with sufficient enough strike prices, has to do with sufficient enough expiration dates. And these are hard because if you're a market maker for regular options, there's a opportunity cost of locking up capital to sell longer dated options. But like, I think like liquidity, obviously gas fees, if you're a retail options trader in DeFi, are tough right now. I think given where L1 gas is, it's pretty much it's not profitable to sell options on L1 right now. But stepping away from on-chain options and now getting into perpetual vaults actually solve a lot of these problems that are seen with DeFi options protocols. So by pooling deposits together in a vault, you don't really have to worry about gas because gas is socialized across every vault depositor. So you're not going to have to worry about selling options when there's a spike in gas because it's only one transaction that right now is done OTC with market makers. And to touch upon that liquidity problem with DeFi options, that's not really an issue right now with these perpetual vaults because they're interacting directly with market makers who have said that they're always going to be willing to buy options because they do have that ability to hedge on Deribit or in other CeFi sort of exchanges. So I think what were traditionally the biggest headaches for on-chain options, these sort of perpetual vault strategies that StakeDAO has solve a lot of those problems. So that's been a really great improvement to user experience of those that do want to sell options.
So I think something that we've had a lot of questions around ever since we launched the strategies is how do we mitigate risk? One of that we've just had someone ask if, for example, ETH blasts through the strike price and is way over for a covered call. We can potentially have a negative APY. So, I think it's pretty important that we kind of touch on this and explain it to everyone, how we mitigate that risk. Hubert, maybe you want to get into this?
Yes, I mean, so yes, the beautiful APYs you see come with a higher risk. So there are two ways to think about it. If you think, for example, take the covered call, ETH covered call strategy. If you think in ETH terms, what's your risk is that if the settlement price is above the strike price, you're going to need to pay the difference to the counterparty, right? If you think in dollar terms, however, your position is never, if the settlement price is above the strike price, your position in dollar terms is equal to the strike price plus the premium, right? So I think this way is, I actually, some guy from the community really did a really cool analysis on that, and the way he looked at it was quite amazing actually. So he was saying basically entering into an option strategy is like making a limit order, but while it's not reached, you generate yield, right? So it's beautiful, right? So if ETH increases a lot, you're going to sell it and you're going to make money. And meanwhile, you're going to generate some yield. So that's pretty cool. But still, in ETH terms, you might be in a position where holding your ETH would have been more profitable than entering a strategy. Yes, that's true. And the way we mitigate this risk is that we basically look for options. When we select the strike price, we look for options that reflect a 0.1 delta. So delta is a Greek letter that several Greek letters in the option pricing environment, and delta is the Greek letter that corresponds to the derivative of the option price. So basically, it's a measure of the risk also, and that way we can easily find the ideal strike price for us to keep the same risk level. So yeah, that's how we mitigate risk.
Yeah, and to kind of build upon that, the goal each week for these strategies is to select a strike price that won't be reached. And so like Hubert and the rest of the team like does put a lot of thought into that about like why they've chosen that delta to sell the options at. It's because like with reasonable moves in the market, the underlying asset price is unlikely to reach that strike price. But I do also like the sort of limit order analogy, because if you're selling, let's say, if you're selling calls, the way I used to work in traditional finance too, the way I would think about it was, okay, if I hold ETH, would I be okay selling my ETH at this price next week? And if the strike price, let's see, what is ETH trading at right now? It's at 41.59. If the strike price for next week is 5,000, if you told me today that, like, all right, you're gonna sell like X% of your ETH at 5,000, would you be okay with that? I would feel good, because I'm making money up until that strike price, and then that strike price just represents the price that I'm selling it in the market. So you'll gain the premium every week regardless. But as the price of ETH rises, like, you're still making more money. You've just given away the upside after the strike price, because that's basically the limit sell order that you've placed each week with the perpetual vault.
So, like, I think an interesting thing to get into here would be to talk a little bit about the strategies we currently have on offer. So, obviously, we have the ETH and the BTC covered calls. Maybe Hubert, do you want to talk a little bit about the calls versus the puts and the market conditions they're suited to?
Yeah, so we just explained how the covered calls were very cool, because either way you always make money, right? For the put selling strategy, it's a bit different. Actually, the put selling strategy is a bit of a covered call on dollar. So if you think in dollar terms, actually you can lose when market goes down, which is like a bit the double pain, right? But the good point of this strategy is that it takes dollar as a collateral. That means that what we do is that we use this collateral to generate additional yield, going on the Frax strategy, which is currently generating like 50% APY. So it's pretty crazy, right? So this way we manage to screw a bit the risk profile of the pool, right? To get weekly APY, which is higher than the risk we are actually taking. And on top of that, the good thing is that the market is also pricing that the fact that potentially the market can go down faster than it can go up. which is not always right in crypto, but as we saw last week. And so put options are generally more expensive than call options. So basically the idea with the put selling strategy is to generate like a very good APY. But again, you generate it on stables. So it's a different approach in terms of what you want to achieve. If you want to be long ETH or long Bitcoin, you'd rather go to a covered call strategy. If you want to get supercharged returns on your stables, and I think so to come back to your question, in bear markets, you'd rather be in the covered call strategy, right? In bull markets, you'd rather be in the put selling strategy. But then this is also volatile. It's more a question of what asset do you want to hold, really.
Right, and we've just had another question around why we don't have a Bitcoin put selling strategy. So maybe we can get into that.
Yeah, it's an excellent question. I think eventually we will have one. It will be quite fast to do one. We try to fill a bit the Ethereum one, but I mean, if the community wants a Bitcoin put selling strategy, we'll definitely add it. It should not be too complicated.
Cool. We
have one option strat per asset that's why we have and we selected Ethereum because Bitcoin can go crazy sometimes, right? But yeah, anyway, we'll definitely add it at some point.
Right, and so we've already lifted the cap for both strategies a bunch of times. We just had another question around what the max cap is, and I'm assuming that the user's asking what it will be in the future on both of these strategies.
The idea of the max cap is not to set a limit because of market liquidity. It's more a security measure for our users. So we are very happy to increase it every time it gets very close to being reached. There's no reason we shouldn't go to hundreds of millions on the strategies.
So we've just had another question, Hubert. Someone's asking you what a very good APY for ETH puts.
Yeah, I mean, of course, the APY you get is also a measure of the risk you take, right? So there's no good or bad APY. But the way you sell them, you can achieve a better price, right? And currently, we've been pretty successful on the way we have managed the auctions with market makers. It will be a challenge the day we start automating the option selling process, obviously. But we have had quite some good ideas that should enable us to get even better pricings. But if we want to talk a bit about numbers, last week, which was a pretty good week, I have to say, not all weeks are like that. Last week, the Ethereum covered call strategy made 1.7% just in 7 days. And the Bitcoin one made 4%. So I think this is the kind of APY that you cannot find anywhere else on the space, right? There are a lot of beautiful stablecoins APYs, but very high APYs on Ethereum, such as above 150% APY on ETH, above 600% on Bitcoin. I think not many people are managing to achieve this kind of APY. In the long run, we should, you've seen the new UI, right? So we have shown the historical APYs. We are more around like 30% for ETH, which is quite a decent APY, right, for ETH, and 80% for Bitcoin. But it should be, I mean, our projections are more like around 30% long-term return for the strategy, which is cool for both those assets, because like for LP farming, for example, on ETH, the best strategy for stake ETH, for example, is like around 12% on StakeDAO also. So getting 30% has some value.
Right, and so I mean, how are the week-to-week market dynamics playing into the return, Hubert? Do you want to touch on that?
Sorry, I didn't get.
So, for example, last week, we saw 4% in 7 days on BTC and 1 point something on ETH. Do you want to explain how the market dynamics, how they play into those returns?
Sure. No, very good question. So this is something that is due to the fact that we mint the tokens when we close the previous positions. So we select the strike price around noon CET or 1 p.m. CET every Friday, right? And then we open the vaults, and people are able to enter or withdraw from the strategy. And in the evening, we sell those options. But the thing is, the market can move between the day, the moment you select the strike price, and the moment you sell the options, right? So last week, the market moved a lot upward. So our options gained a lot in value. This week, it was a bit the reverse, right? The market moved downward. So this week, we will be probably targeting a return around 20%. I mean, 20% APY, not 20% weekly return. So yeah, that's the point. And also what I want to say that automation, we are exploring, for automation, we're exploring ways to always like have the consistent return, because you always select the strike price and sell the option at the same time, while still enabling people to enter or exit the vault. So we are exploring that. It's really not easy. But that is what we would love to achieve, actually, yes.
So I think you actually just answered another peripheral question, which was around Fridays being the day for deposits being open and deposits and withdrawals being open, and the yield. How do users access the yield, Hubert?
How do they access the yield? You mean I detailed the full process of going through the strategy?
Yeah.
Yeah. So as mentioned, the vault, they sell options, a limited amount of options every Friday night. So once it's done, the position is closed, right? So you need to enter before that. So you enter into the strategy, and then the amount you put is taken into account in the amount of option that we are going to sell. Then once the position is once we call the function, which is called rollover, which sends the funds from the vault to the strategy. So the funds are going to go through the LP, the liquidity mining strategy. So passive Frax or passive ETH or passive Bitcoin strategies on StakeDAO, right? And the options are going to be sold. So anyone entering after that will be in an empty vault for 1 week. So that's why we advise people to enter while it's open on Friday. And again, you can't withdraw, right? Because while the vaults are closed, because obviously your funds are backing a credit position, which is the option. So you need to wait for the option to expire, which is every Friday, 8 a.m. UTC. be able to withdraw. But this way, we managed to, with this architecture, we managed to get 2 layers of returns, right? So you get the layer of return from the passive strategy, get the layer of return from the option selling, and then you can take your LP token from this strategy, and you can get some incentives because we really want to expand on this option business. So we put crazy incentives on top of that. So yeah, all in you get 3 layers of yield.
So just on those incentives, we have another question around how long users can expect these APYs to last with regards to the LP farming. Sorry.
Yeah, alors, I'm sure StakeDAO users are quite used to the way we calculate the incentives. We actually, quite a few months ago, we passed a proposal that enabled to automate the calculation of incentives depending on the revenue they generate for the DAO. So for new strategies that we want to bootstrap, what we would do is that we assess a future TVL that we want to reach to assess the revenue that the strategy is going to make. For ETH covered call, because the option selling itself, the option strategy in itself doesn't take performance fee. All the option premium goes to the user because we don't want to skew the risk profile, right? So the only performance fee we take is on the underlying collateral, which is working at the LP farming rate. So for the ETH covered call strategy, it's making actually nearly no revenues, right? So in the long run, I'm not sure how this will evolve. Also depends on the ETH pool on curve. The Bitcoin one is often quite well yielding, and the Flax one, I mean, got crazy yield, right? So those should get really good incentives in the long run. Let's hope that the ETH one keeps them at least. I mean, quite some time ago, quite some time from now, right? And also we are working on a proposal right now with Frax and I don't know if we have a lot of FXS holders in the chat, but if you guys have some FXS, once we put this proposal, the idea is to get a gauge for the put selling strategy. So this should enable to get an additional layer of returns of FXS incentives for invested in the put selling strat, right? So we should be able to reach 150% APY normally quite easily.
So one other interesting question that might be for you, Wade. Someone messaged me about is Opyn planning to offer straddle options, so options that are designed to capture volatility?
We discussed. Yes, Wade, please go on.
I would say, like, in terms of straddle options, you can definitely create straddles. I don't know about the dev team's focus on, like, right now adding stuff to V2. I think most of the energy is focused on Squeeze, but I definitely wouldn't rule out the possibility in the future. But I guess we did build the protocol in a way that, like, anybody could build any type of option strategy on it. I just don't know if that'll be native on the Opyn options chain.
The only difficulty with that is when you need to sell a call option and a put option, then you don't have the same collateral for both. So that's a challenge that we don't have the answer yet on how to solve it, but I'm pretty sure the Opyn team will find a very good way at some point.
Yeah, it's right now you can't have one vault with two different types of collateral. So it's possible to do if you coordinate between two different vaults, but you tend to miss out on the capital efficiency that you would gain from having everything housed under one vault. So like it's definitely possible. It's just not the optimal level of capital efficiency because of that difference in collateral that Hubert pointed out.
Okay, interesting.
So we have another interesting question, Hubert. Maybe you can answer this one around. Obviously, right now our process is different to say Ribbons, which uses an on-chain process. Do you want to just talk about our the way that we organize things with market makers, and if we're looking to move on to on-chain?
Yes, so I mean it's a very good question. I've hinted the subject a few times already. It's a necessity to go automated, right? So currently the way we work, to answer your question, is like Ribbon V1. So they would manually sell options to market makers. Ribbon V2 found a quite interesting way of selling automatically and fully on chain their options. But what we see that it's not really optimal to maximize the yield because they struggle selling at a very good price. And that's a bit why we have overperformed them over the past weeks, right? So we are currently thinking a lot about the way we can automate, but I don't think we will go down the road that Ribbon take currently. But we are thinking of very cool stuff. I can't give too much alpha, but let's say probably at some point it will involve NFTs, right? Be cool.
Cool. You know, and I think a nice way to kind of wrap things up, maybe Hubert, if you could give a little elevator pitch for the ETH put selling strategy, because you know, right now it has about it's about half capacity. Projected yield is 82%, which is just crazy. So maybe if you'd just like to explain that one to users, because I don't think people have really got this one just yet.
Yes, sure. I can definitely do that. So basically, the options, the ETH put selling strategy is taking a dollar collateral to sell put options. So why dollar collateral? Because if ETH goes to zero, then if you collateralize with ETH, then you have no collateral anymore, and you can't pay your option, right? So you need to collateralize with dollar. So we used Frax because we're very close to Frax. We're super bullish on this project, building together, amazing team, etc. And so why just have the APY of selling put options when you can have the APY of selling put options plus the nearly 100% APY of yield farming the Frax passive strategy, right? So that's the way you would enter this ETH put selling strategy that you can put. So it's pretty cool. So that we opyn have built together. This way you can enter into strategies with whatever asset you have. So you can enter with USDC, Frax, USDT, DAI, or even Curve LP tokens. So you can really choose the way you will. Depending potentially on what asset you have on your wallet, you can choose on the slippage on Curve. You can directly want to put your Curve LP if you have some, and want to save gas. So this is quite cool. And then, as I mentioned, this goes to the passive LP strategy. Then we sell options, put options on that. Same process as for call options. And then and then currently you can generate additional yield on. No, not yet actually, but soon you'll be able to generate additional yield on with the SDT incentives, and we hope also FXS incentives. So we need everyone's vote for that once it's live. I see another question that is quite interesting, Johnny, is would your option strategies work with option protocols with a peer-to-pool model? So Wade, what do you think about that?
Yeah, I mean, the options itself, like Opyn set up as an order book, so anybody could place a limit order on the bid or ask size. I also think for the vaults, it could easily function in a peer-to-peer model. I know that's what Ribbon has done with their Gnosis auction. Like anyone can buy from the vaults. Right now, I think the majority is done by market makers, but it's definitely a possibility in the future. I think one of the hurdles right now is like people are still, at least users in DeFi are still like learning about options. I think options are going to be a necessity for DeFi's maturation, but like once users become more familiar with the products, like I think you would have more people buying the options than just market makers, in which case it would be sort of a bigger peer-to-peer market, or once more institutions or large whales start to familiarize themselves with options. They're just like an incredibly useful vehicle to mitigate risk, and I think there's even been a few like whales or funds that have been hedging themselves with some of Ribbon's vaults, V2 vaults recently. So I think it's definitely possible, and I don't think it would be in the short or sort of near term, but I think eventual next step.
Yeah, I think there's one project that is definitely to follow is Hashflow. They will enable selling options to pool, and then the pool will do the auction with market makers automatically. And this is really interesting. This is something that we have under the radar for automation stuff. I mean, we're not sure yet of what we're going to do for automations. We have several roads. But yeah, very good question.
Wait, another interesting question that I've had in a DM is Opyn looking at launching on L2s, on Polygon, on Phantom and so forth?
So we've already deployed the Gamma protocol contracts on Arbitrum, and Gamma protocol is basically Opyn v2 for integration teams to build on L2 immediately. In terms of the Opyn order book, right now we're pretty heads down with Squeeth, but once Squeeth launches, because the contracts are already there, it wouldn't be that much work to redeploy on L2.
Amazing. Okay, guys. I think we can kind of start to wrap up. We've fielded a lot of really good questions from the community today. Anyone that has questions that from here on, or that maybe didn't get answered that we missed, just jump in the options channel on Discord, where we're always more than happy to answer, and some of the guys who've been around in the community for a while might be able to answer as well. Also, we now track historical performance on the strategies. So if you actually go onto the options tab on strategies, you click on a strategy tile, you can scroll down and you can actually see the cumulative yield week by week. So we will be opening these strategies on Friday. That's the day that it happens for deposits and withdrawals. So just follow along. If you're not comfortable getting involved yet, just follow along on the weekly progress. But thanks a lot for joining, Wade. Really great to have you. And also Hubert. See you guys on Discord.
Yeah, thanks for having me. Hope everyone has a great rest of the week.
Yeah, thank you very much, everyone, for your good question. And again, very sorry for having been a bit late. Looking forward to seeing you in the options strat. So.